I'll introduce myself first. My name's Ian Coleman. I'm one of the analysts at First Trading. We provide analytical trade reports for the 7 o'clock UK Open, cover various pairs, stock indices, for FX Street. Now, is there a problem with the mic? It keeps on reading that it's going on and off at the moment. Great. And I used to have a blog on the site Samurai Trader, which some of you might have seen a long time ago now. And on there, we used to do something called Timeframe Breakdowns. So we basically take a currency pair, take it all the way out to larger time frames, and then break down formations, look for fib levels, support and resistance levels, reversal candles, etc. And that's what we're going to discuss today. Okay, so I said I work for PIA. First Trading is a retail site. I'll just quickly go through this. This is just a copy of one of the trades on the dashboard that we offer, and that's a snapshot of the dashboard. It's quite easy to use, and as I said, it's delivered to the website at 7 o'clock every morning, and it's updated throughout the European hour. Okay, so you need to have a basic understanding of chart formations. Okay, here I've just done a slide on some of the very basic chart formations. There's obviously complex symmetrical patterns that you can look at as well, Elliott wave, etc., etc. But just for this presentation, we're just going to talk about basic chart formations. So we've got double top, bottom, symmetrical triangle, wedge, head and shoulders formation, an ABCD pattern, which is also seen in Elliott wave, ascending, descending triangle formations, and channels, consolidation, bullish, bearish channels. Okay, so head and shoulders formation. This is a bearish formation on this example here. So we've got a left shoulder, head, right shoulder, break of the neckline, and you should then take the area between the top of the head and the neckline to the break point, and that's your target level. Now, I'm not going to spend too much time on formations. Wedge, this is an ascending wedge formation. The initial target level on a break, you take the widest point of the wedge, you take that from the break point, and that is your target level. With some aggressive wedge formations, the higher the wedge, the more aggressive they normally are. You can retrace all the way back to the bottom or the start of the wedge formation. So there's two potential targets for wedge breakouts. Symmetrical pattern. Although the bias is regarded as neutral, there is a slight bias for a symmetrical pattern. If the market originally was moving higher and then consolidated, as it is a consolidating pattern, then the bias is to break to the upside. Okay, it can also be seen as a flag or a pendant. Okay, so you would basically take the length of the rally, the initial rally, take that from the break point, and that will be your target area. Double bottoms or treble bottoms. Again, you want to be looking for, you really should have an oscillator on here as well, an RSI or a MACD. You really want to be looking for divergence on the second bottom. Okay, so you want your oscillator to be reading higher. So you look for the double bottom, and again, it is time frame breakdowns, Bookie. I'm just doing a very brief summary on chart formations, because that's going to come into time frame breakdowns when we get down to them. Okay, bullish channel, symmetrical channel, also flag formation. Ascending, descending triangles. Again, widest point of the triangle. Descending triangle, obviously you can see that the bias is to the downside. It keeps on making lower highs. As it breaks, you take the widest point of the triangle, and that is your target level down here. ABC formation. Difficult to note the target level for an ABCD. Can be below A, depending on how the formation or where the formation is. If it's in an Elliott wave formation, so it's a second or a fourth wave, then it will either break the low or the high, depending on which wave round it is. Okay, and we also need to have a basic knowledge of reversal formations, candle formations, excuse me. Here I've just put some basic ones on. We've got morning star, bullish engulfing, engulfing patterns being my favourite reversal pattern. Bullish inside Arami and a bullish hammer. And then obviously the reversal here, we've got an evening star, shooting star, a bearish inside Arami, and an evening doji. Okay, and we basically are going to be looking for prior to action at areas of support and resistance. So timeframe breakdowns. We're going to look at monthlies, also known as AMRs or acute monthly reversal candles, weekly formations, daily, 4-hourly, 1 hour, and what I call noise, which is basically all the way down into a 5-minute time frame. So first the monthly. Okay, so we're looking at areas of support and resistance. We're looking for breaks of support and resistance. We're looking for confirming candle formations. We're looking for chart patterns. Here we can see an area of support. We break the line of support, and then we constantly make these lower monthly highs, okay, as we move down. We then get an inside Arami candle. Basically, an inside Arami or an inside candle shows investor indecision, okay? It's neither taken out the high or the low of the previous candle. And then we basically want to be looking for a break of the previous candle to confirm that the trend has changed. So here, the break is of this candle, and it then moves up to the upside. Okay, rejection of a previous high, again, an area of resistance. I wouldn't expect traders to trade off monthly candles, but there was a report that I read quite some time ago now, where a guy basically broke down in one lot, trading 4 different currency pairs, and all he did was take the acute monthly reversal candle and changed his bias, or reversed his position if he got an acute monthly reversal candle. I think out of the 4 currency pairs that he covered, he had 36 trades, and out of those 36 trades, I believe the win ratio was about 25 winning trades. So they're not to be ignored. Basically, the higher the time frame, the more relevant the candle. Okay, and that's why when I was talking previously about the 5-minute or 3-minute time frames, unless you're scalp trading, it's noise. Okay, you get your bias off your larger time frames, and you want to be trading with that bias. Okay, so here, just getting back to this chart, we've got rejection of previous highs, moves down again, and again we get this inside candle, or this investor indecision candle. Break of the high, market moves up again, inside hammer, and then back down towards this trend line. Now this formation, it's not a symmetrical triangle. It's not an ascending triangle formation, but it is a period of consolidation. Weeklies. Now, weekly candles I do take a lot of notes of. Okay, I'm always looking for reversals or continuation patterns. I think a lot of novice traders or intermediate traders are constantly looking for the market to change direction, so they're constantly trying to pick the bottom or pick the top of trades or trends. You're far better off waiting for the market to confirm that the trend has changed, and then to jump onto the trend. We've all heard the saying, the trend is your friend, but it is until the trend is over. So we want to be looking for these continuation reversal patterns in the different time frames. So here again, bullish engulfing candle at the base, which is obviously where we want to be looking for them. We don't really want to be seeing engulfing candles in the middle of a trend. If they are, they're a continuation pattern. So here, bullish engulfing pattern moves all the way up to a bearish engulfing. Again, down to the previous area of support. Here's our area of support here. Spikes through the area of support and then gives us a bullish engulfing pattern after a doji. Okay, market then moves up. You can see here this was a previous area of resistance. Okay, we've got rejection of highs, pincers or chopsticks. Not really a great can't understand the rejection of lows. Here, this is a candle in any time frame is not complete until it's closed. So even though it spikes through this area, this base, this long spike is a rejection. So basically the market moved all the way down to this low, around 157.50, and then the market refused. Buyers came in and pushed it all the way back up. It closed up around here, but around 161, higher than 161, probably around 161.50. So it's a rejection of the lows. It's a rejection of this previous area of support. If we drew an imaginary line across here, we can see that all these areas, the market has failed to break through. And again, it fails to break through. An area of support, as long as it holds, is still an area of support. As soon as it breaks, it then becomes an area of resistance, which we'll see in shorter time frames. So this was an area of support, came down, rejected the lows, gave us a bullish engulfing candle, then moved up again, pincer tops. So areas, the market moved up again towards 166.50, rejects the highs twice, and then moves lower. And again here, we've got an area of support, which was our previous low. And again, spiking candles, pincers, rejections of the lows, and then we move up. There was no reversal candles here, even though this is a decent warning candle, because it has taken out the high of the previous candle, and it's taken out the low of the previous candle, but it did reject. It obviously needs to close down below the open of the previous candle to obviously fully engulf. A lot of analysts or textbook engulfing candles will say that just the body has to engulf the previous body. Okay. What I like to see is the whole of the candle being engulfed. Okay, so I want to see the whole of the range taken out, because basically what that then dictates is the market moved higher. It did make a previous high, but then it completely reversed its attitude or its sentiment, and it took out the low. So it completely engulfed that candle. Okay, so it's virtually the opposite of an inside candle, where obviously an inside candle is indecision, where the market can't make its mind up which way to go. An engulfing candle, the market continued in the original trend, be it up or down, and then completely reversed and went in the other direction. Okay, dailies. Again, we're going to start breaking it down a little bit more here. Start using trend lines. We've noted areas of support and resistance, okay, by the pink line. So here, decent trend. The market is making lower lows and lower highs. Again, at the base, we get an inside candle. We had an inside candle here, okay, it's not a particularly great one, but that shows investor indecision. But what happened, it didn't break the previous high, okay? What actually happened was it broke through the previous low and the market continued to the downside. Here, this is perfectly inside the previous candle's body and range. It then breaks the high and it moves up, okay? Across here, we can see that we had an area of support, and then we get these pincers, 4 of them in total, that basically show price rejection at this level here. Okay, again, a move back down, and here we've obviously got the trend line break, and this is when we were talking about why I said you need to have a half decent knowledge of chart formations earlier. A lot of the time, if we get a channel breakout, a wedge breakout, a triangle breakout, what will happen, we'll push out and break out of the channel. Then the market will reject and come back down to test the previous area or the previous line of resistance. So this was our line of resistance down here. The market then breaks out, moves back down, spikes into it, can't push through, spikes into it, large rejection, area of support now, and then she moves back higher. Okay, again, not particularly great reversal candles for me. There are pincers, it is an area of support, it's against a trend line, but if that candle there had been green and it had taken out the body of that previous candle, then it would have been a far better engulfing formation. It does, as I said previously, what I am looking for is a reversal of, or an engulfing candle of the whole of the previous range. And this candle here did take out the previous range. It's not textbook. I said the main factor here is really the rejection and the spike into this area or into this line of support. Market then moves higher. Again here we've got an inside candle which shows investor indecision, but then we get this bullish engulfing continuation pattern which keeps moving higher. Okay, and then up to the top again we've got our trend line. Bearish engulfing candle. I don't think that was a previous area of resistance. Okay, bearish engulfing candle. This was a previous area of support, comes down, again, tests the trend line, spikes numerous times, and then we get the trend line break. Okay, move back up to an previous area of resistance. A very decent bearish engulfing candle, and then the market moves to the downside. And then what happens? We get a wedge formation. Okay, the steeper the wedge, the more aggressive the breakouts normally are. So here we've got a very decent wedge, and also we need to note that area of support. So we've got a previous area of support there, we've got a wedge. Obviously you have to wait for the wedge breakout to confirm the bullish bias or the bullish sentiment. You can then buy on the break, on the close of the candle of the break, or you can look for a pullback, again, as we said previously, to what was a line of support, of resistance, then becomes the line of support. Okay, any questions up to now? No? What we'll do, I thought we'll break down, we'll go through this summary, then we'll go on to the chart package that I use, and we'll talk about some different currency pairs and break them down and basically see what we can see. So 4 hour, here, numerous inside bars. What time frame for the analysis on the site? The weekly reports are sent out with weekly charts and daily charts. The daily reports, which are sent out from Tuesday to Friday, most of the analysts for the company will use daily, 4 hourly, and hourly charts. For my personal trading, I do get down all the way into a 5-minute time frame, because what I'm looking for is I normally look for a reversal pattern. It normally have to be around an area of support resistance, a fib level, a previous high, previous low, a reversal level, cloud support. I'll then look for a reversal candle. I break it down into a 5-minute time frame, and I'll basically try to get in cheaply with a high risk reward ratio. Trade in a small amount, and then look to add in if the confirmation of the trend pushes it higher or lower, basically. So here, let's get back to this chart, the 1 hour. Inside bars, indecision at the high, bearish engulfing candle, continuation patterns on the way down. Okay, then we get this ABCD formation. The point of entry after you have a choice. Everybody also has a choice. You either buy in on the close of the bullish or bearish engulfing candle, or the break of the previous candle if it's an inside Arami candle, or you wait for a retracement. Obviously, as long as that candle high is not broken, then that candle still valid. So obviously here you've got a bearish engulfing candle. It then retraces up, and at that point, I'd be, after seeing this candle formation, I would be onto shorter time frames. So I'll be looking to shorter time frames to try and gain a good entry level. And I'm looking for the same thing. Okay, I'm still looking for the same chart pattern in shorter time frames. So I'll break down the big picture. It was once described to me, time frame breakdowns, as, not that I'm promoting gambling, but like playing cards, okay, like playing poker. Okay, the higher time frames are your picture cards. So, your monthly you can regard as your ace, your weekly, your king, your queen, your jack, and all the way down. So they have higher value the higher the time frame. The lower the time frame, the lower value they have. But what you can do is also use the smaller time frames to try and get in at levels where your risk is going to be limited. Obviously, as I said previously, if you were to trade purely off monthly reversal candles, acute monthly reversal candles, you'd need huge stop losses. This guy did this report that I mentioned previously. it's all, it's hypothetical. He didn't trade it in real money. If he had done, I would have thought that he would have needed a few million in a trading account to be able to put on just the units that he did, because of where you need to have your stop losses. And obviously most of us, myself included, haven't got that sort of collateral. So what we're looking for prime areas to enter trades, and you can use chart formations, fib levels, candle formations to direct you in the right direction. Okay, you then break it down into shorter time frames to try and gain the best entry. So getting back to this chart, so here we've got a bearish engulfing candle, moves down. Okay, A, B, C, D. As I said, a lot of the time these are seen, if you look into Elliott wave, Elliott wave will dictate that the impulsive waves are in 5 waves, reversal waves are in 3. And a lot of the time, you will see a perfect ABCD pattern. And basically what an ABCD pattern, or a 1, 2, 3, is that A to B is the same length as C to D. Okay, so you basically take the length of that formation there from low to high. You then take the next low, as long as it's a higher low, and you then project it up, and you then look for reversal signals in shorter time frames around that high. So we get a spinning top, we move back down, area of resistance again, okay, inside bar, breaks lower, and then a spinning top at the bottom. Okay, actually engulfing there, which would make you aware of a possibility of a breakout of this wedge. Okay, 1 hour chart. And then obviously today on the slides that we're showing, this is just raw. It's just raw material. There's no moving averages. We haven't got RSIs on there. We haven't got any sort of oscillators whatsoever. This is purely price action. Okay, once you develop your trading knowledge, and I'd never advise anybody to put too much onto your charts. And sometimes when people look at my charts, they are astounded by how busy they might look, but they're not. I don't take note of everything that's on there. I use Ichimoku Cloud, but what I'm looking for there is I'm looking for areas of support and resistance. Okay, I don't necessarily want to be selling into a very large based cloud. But like I said, I'll show you all of that in a moment. So here, bearish engulfing candle again, moves up, small indecision candles. Again, on a bearish engulfing candle, it's always worth taking the 50% level. Okay, just drawing a line around the 50%, and the 50% is not the whole range. Okay, it's just the body. So just draw a line near the 50% level and just watch that level in shorter time frames. It's called a Maribuzo. I think I've said that right. And it's basically the 50% level is an attractive level for a pullback. So if you think about Elliott wave, okay, you couldn't really take it off an hourly candle. But Elliott wave retracements are between 50 and 61.8% normally for the first wave. So if you get a decent reversal candle, if you draw a 50% line on the bearish engulfing candle, so a Maribuzo line, and then you note or you look in shorter time frames for short time frame reversal signals around that level, it can be quite beneficial. Okay, so here, area of resistance, bearish engulfing again. Okay, the market moves lower. And you can see here again how the market moved up towards that 50% level. Area of support, but really sideways trading. So the bias is still to the downside. What have we got here? We've got lower lows and lower highs, okay, which is basically dictating that we're in a downtrend. So lower lows, lower highs, breaks through again with a bearish engulfing candle and moves again to the downside. Area of support, inside candle, drifts higher, but only up to this area of resistance, okay? So this was, this previous area of support now becomes an area of resistance. I haven't drawn my line exactly on there because I was obviously trying to show the area of support here. But if you actually took the base of these spikes, it would coincide with the area of resistance to the upside. So here, again, area of resistance. It's not a bearish, it's a textbook bearish engulfing candle. Not really good enough for me because I would like to see the top taken out, okay, and then the market moves down. Another area of support, etc. It's not a bad idea actually. And then the noise, okay. So here, just to show you this last slide, we get numerous signals here: bearish, bearish, inside bar, bearish candle. And also if you're paying away spreads, which we all are, and you're just going to trade purely on price action, you would have been in so many trades here that I wouldn't have thought you'd have made much profit basically. Okay, any questions before we go over to the live charts? No, you always have to wait for the candle to close. Okay, let's drop this off and get some live charts. Okay, obviously the analysis that I'm going to talk about here is not auto action. Okay, I have to make that pretty clear. It's just my views. Can we see those charts? And I normally, the last slide was just our website address, which is www.first4trading.com, and the 4 is the number 4. Okay, somebody pick a currency pair for me. So the last time frame was a 5-minute chart. Aussie dollar. We're on it. Okay. So basically what I've got here in this chart setup, you see these are CQG charts which we use for our analysis. It's a very, very good charting package. It's a little bit expensive, but one of the greatest features that I like on it is, you'll see them here, is these highlighted, let's just pull it up. Okay, it'll highlight chart formations. So here you've got an inside Arami, engulfing pattern, inside candle, engulfing. Okay, so it's quite good for the lazy trader, if you like. I've also got 2 moving averages on the chart, which are used for support and resistance. I've got a 15 EMA and a 62 EMA. The reason why I use those moving averages is because I'm quite fanatical about fib levels. Obviously 62 EMA is as close to 61.8% or 61.8 as I can get. And basically what happens then, if you're on a 4-hour chart and you're looking at 15 EMA, when you break it down to the 1-hour chart, that 15 EMA becomes the 62. So it's showing me the same thing but in different time frames. And basically, as I break it down through the time frames, you'll note as we go through the charts that it does hold well for areas of support and resistance. Jack, I can answer that question for you already. Gold, I think, is bearish in either a C wave in fifth wave or the start of a bear trend. So I will get onto that one in a bit. So Aussie dollar. On the RSI setting, the RSI setting is also at 15. I'm not really looking at RSI for overbought and oversold levels. What I'm looking for, I look to follow trend. So I look for reversal candles. I look for confirmation of trend reversal. And basically what I'm looking for on large time frames is the RSI to give me a bias. So here, it's been the Aussie dollar 1-hour chart. Okay, breaks the cloud to the upside. We've got RSI above the 50 level, which is what I'm looking for. Okay, and then I'm looking to basically to trade the trend. And until I get a decent confirmation of a trend reversal, which can either be a break of the cloud with the RSI, sometimes a moving average crossover, although I don't really use that because it lags too far behind the market. But I'm using the RSI as a bias. So you can see here we break to the upside. Bullish formations, and this whole time the RSI is above 50. Okay, it's only at this level here where we break down in between the moving averages that it dips below the 50 level. And that sometimes, not always, but that sometimes can be a warning signal that the trend is about to change. Obviously, the fact that we get a lower high here as well, with an engulfing candle at the top, is a pretty decent signal that there's the possibility of a top in place. So monthlies, I'll just move that out of the way if I can. So it's on a shorter time frame. So here, what do we have at the peak? We have an engulfing candle formation, decent move down, and now we've had this consolidation, okay, which we'll see better in shorter time frames. I do look at, I'm not that good at spotting them, and I don't use automated systems to spot to spot patterns. But if I do see them, yes, I do trade them or try to trade them because the risk reward is so good. On a lot of harmonic patterns, you can get about 6-7 to 1 risk reward ratio. So we've got consolidation. Okay, the trend is obviously still to the upside. Just note what happened here on 2 occasions. It came down, touched the 50 RSI, and then moved back to the upside. And again here, just touched the 50 RSI, and then moved higher. So this is the monthly. Like I said, I don't expect people to trade off the monthly, but we can get a bias here. We've had a decent run up. We're obviously still making higher highs and higher lows. Can everybody else hear me okay? Yeah. So break it down to the weekly chart. Okay. So a far better candle here off the high. So we've got a very decent bearish engulfing candle. Okay, moves down towards or inside the cloud formation, makes a lower high to start with, which is obviously our first decent indication of a change of trend. Not a long-term change of trend, I don't think, but a short-term change of trend. Moves back down. Again, support off the bottom of the cloud. Moves higher. Engulfing candle. Okay, and we're basically making, or we've made, a symmetrical triangle formation. Okay. Now, after a move upwards, the bias is still to break to the upside, but only very slightly. And we're inside the cloud. I know there's some very good contributors on FX Street that look at Ishimoku cloud. And basically, the bias, one inside the cloud, is neutral, with a slight, and this is only very slight, upward bias, because it entered the cloud from the top and it didn't break through the bottom, then the bias is still to break to the upside. Okay, and we do a separate webinar on Ishimoku, which I think was recorded last time we did it. I'm sure one of the ladies at FX Street will tell us in a second. And I posted this onto the chart, sorry, into the blog earlier on. Need to get my hammer back. Come on. Sorry about that. Because this was obviously taken off a shorter time frame. So we've got this symmetrical pattern. Okay, and there's decent reversal candles in here. So, engulfing candle at the high, inside Arami at the low, and then we've got an inside hammer formation here. Okay, so it could potentially be making, at a previous high as well, could potentially be making a short-term top here. It did break the previous candle, but it hasn't held. If it breaks and holds the low from the 3rd of Jan, then I would look for price to move lower, okay, down towards this sort of level. And you can see now how the bias has changed. Okay, so on to a 1 hour chart. This was our upward trend. Okay, with continuation patterns, spikes through support, engulfing pattern at a lower high. Okay, and then she's broken down. And again, what happens a lot in trading, as we said earlier on, is with cloud formations, we'll get breakouts of the cloud, and it will then come back to retest. So it comes back to retest the breakout level. Okay, we're still under the 50 RSI, comes back to test. It then hits the moving average and the cloud and moves lower. And on these retests is when I'd look down to shorter time frames. Okay, because I'm looking to try and get, as we said earlier, cheap entries. Okay. So just to take it back to the hourly, sorry. So at this level here, we pushed up. The high of this candle is 103.03. Okay. I wouldn't recommend using the RSI in shorter time frames. Okay. All I'm looking for is patterns, wave formations, and reversal patterns. So here we've got a 3-wave pattern, which is corrective. Okay, five waves is impulsive, 3 waves is corrective. So we get a 3-wave pattern up. We get an engulfing candle, which would have actually been a great signal to get short. Normally, if I was trying to scalp this, I would have a very tight stop. So I'd look to enter around this level with a stop at the previous high. So the stop would have been at 102.98 or just above it, and I would have been spiked out on that doji. Okay, you can see how the market has gone back to retest off that 1-hour chart, given some half decent reversal candles, okay, and then move back down. And now, again, this looks like just a 3-wave corrective pattern, and I would expect this to move a bit lower again. Gold. Any questions on Aussie dollar? Okay. Gold. Monthly. What have we got at the top? Remember what we said about not being text. Well, this is a textbook engulfing candle. I don't know why it's not highlighted actually. But we get this bearish engulfing candle. Okay. At the high. We get an insider army which could throw you off the scent a bit, but it didn't take out the previous high. It's moved up and then it's pushed back down again. And note where it's hit. Okay, it's hit our area of support. So it's got down to 153, well, $1,336-ish, spiked through and then moved back up. Okay, and what do we get here? Okay, if we'd missed this entry level, then we get a decent engulfing candle, and it also breaks the moving averages. So it breaks the support and it breaks the 50 RSI. So here, if we did miss this entry, it's a very good signal to get short. And again, what we were saying earlier on these bearish candles, if you take the 50% mark, which is going to be about there, that was the area that we retraced on that small inside candle. Okay, so a prime area for entry on a pullback. Decent sell-off. I still think, as I said previously, that this is going to break lower. Fib levels would dictate a move down towards here. So like I said previously, around 145, probably about 144 the figure. It's actually 144.082 would be perfect, 261.8%. Okay, any other currency pairs apart from euro dollar, please? I look at individually. I post reports on 5 different currency pairs in the morning. We do total of 12. We do about 8 stock indices and interest rate futures. I personally watch about 12 different currency pairs. I don't get into anything that's too obscure because I'm looking for short-term or trying to get short-term entry levels on personal trading. Then I don't want to be paying away large spreads, basically. Sterling Swiss, that one I do like. Sterling Swiss, I'm actually long just here. I can tell you actually, it's got my laptop on next to me. I'm long at 147.09, so around this level here. Basically still bullish. Weekly, it's still in a decent uptrend. Obviously, over the Christmas period, we've had some sort of inside candles, which didn't really show anything, just consolidation. You break it down into shorter time frames. You see that the bias is to the upside. Market is still moving in higher highs, higher lows. Got an engulfing candle there, but only came down to area of support. This is the 9-month high at the moment. Okay, so we've got an inside candle around 161.8%. Bearish engulfing, moves back down, but I'm now looking to Elliott waves. So if you look onto the blog, onto my blog in Forex Net, I've done a forecast of this one this morning. So basically wave 1 here, wave 2 down here, a wave 3 extension to here, a small 3-wave pullback, okay, to support, and then what do we get off support? We got a bullish engulfing candle. And at that point this morning, I was then down to a 5-minute chart, okay? And this is the area that I looked at. So this formation here, let's just get rid of the candles because it's a bit messy, okay? This formation here gave us that bullish engulfing candle. So these 5-minute candles gave us that bullish engulfing. So at that point, I'm then looking at pullbacks. So I see it pull back, I see it spike again. As it spikes the second time I get in, okay? And I'm lucky enough to get an engulfing 5-minute candle. So if you'd miss the entry on the pullback, you get this bullish engulfing candle off the cloud, off 5 minutes. Again, inside candles, confirmation candles. And I took my first lot off here, and then I've moved stop loss to entry, and I'm just leaving it, basically. And hoping that the analysis is correct. And I've got a target level at 148.50, which is up towards 261.8%, which is 148.66. So that's basically what I just wouldn't sell sterling Swiss. I wouldn't sell any Swiss crosses myself. Just fundamentally, I think you have to be looking to buy on dips, just because of potential Swiss National Bank intervention. I am a technical analyst, and that's what I do for a living, but I always have fundamentals in the background. When it gets up towards 148.50, I think the short-term bias will be to the downside. And yeah, you could probably make some decent pips, but I can't see the long-term bias being down. I think the Swiss crosses are well and truly. I'm looking for a large ABC. I'm not going to be able to show you here. Let's try and pull this in. Sorry about this, guys. Now, on my other chart package, I've got a fib extension. I'm not sure what level I've got it off. It might be off a monthly chart. It basically dictates that this is 261.8%. So a decent 3-wave correction should eventually get up towards here, 180, 181. So that's the long-term view. I know you can't just purely trade off long-term views, as we said earlier, but it can give you the bias. At some point, this is going to turn, obviously, because nothing goes in one direction forever. But I think it's going to make either an ABC up towards this level, up towards 180, or it's going to move directly towards 180, then move down because you're going to have cloud resistance. So if we see here, okay, so around that level, so it moves up towards that level, then moves down off the cloud to this support level, and then bingo, up we go again, because that'll be a very nice left shoulder, head, neckline, right shoulder, and then move up. And don't take that level as being, 100% solid, because what happens a lot of the time on the head and shoulders formations is the right or the left shoulder would dip. So there's a good chance that it might, you might get towards 174.50, and then it will hit cloud and pull back down. But long-term bias, the bias at the moment is to the upside, and you really want to be trading with the bias, with the trend. Let's try this one. No. And you can see a wave count in there. 1, 2. This is a free wave correction. Sorry. This is off a monthly chart. Very impulsive move back down. Maybe you can see this all right. I know it's a bit very impulsive move back down, which Elliott wave dictates is the third wave. It has to be impulsive, which basically means it's aggressive. Moves quickly away from the moving averages. Okay. Continuation patterns in the middle here. You then around 161.8%, we get an inside Arami candle, indecision, moves up again in three waves, okay, to the area of resistance. What do we get? We get an inside Arami. Well, it's actually an inside doji or hammer. If we can just zoom in again. So an inside doji or hammer there, engulfing candle, and from that point, engulfing candle, engulfing candle. There's no reversal patterns in here at all. It just moves all the way down until we get this Swiss National Bank intervention. So very, very close to 261.8%. And I now think the bias will be up. Okay, it's past 5 o'clock. Has anybody got any questions before we wrap it up? One thing also, we've got a introductory offer on our analysis at the moment. You can pick any package you like for a greatly discounted fee of £25 a month. The website is www.thirstfortrading.com. Any questions at all? No? Okay. Well, I hope you've enjoyed the webinar. We'll be hosting another one next Thursday. I hope to see you again. Sorry it got off to a slow start. It's not the most exciting subject, time frame breakdowns, but it is relevant. And I'm not suggesting you come to every webinar that we host, but if you do, then you'll sort of gradually gain a more in-depth knowledge in what to look for. We send out the platform that we have at First for Trading. Basically, we send out analytical reports to the 7 o'clock UK Open with trade suggestions on it. So it'll analyse the market, trade suggestions, stop losses, profit targets, etc. They're updated as well throughout the day, and we cover over 20 different products. Yes, Jano, but very carefully. There's a report on Bloomberg, I think it was yesterday or the day before, that basically said you can get a lot of false starts at the beginning of the year because a lot of fund analysts will basically start with a flat book. So they go in, buy a lot of options, start building positions, etc., etc. So you can get a lot of false moves. So I think you have to be wary of the long-term view at the beginning of the year. Just really trade off short-term analysis, I think. Okay, best of luck to you all. Happy trading. Hope you're profitable, and I'll speak to you all again soon. Thanks very much. Bye now.